Inflation is absolutely crippling the economy. From gas to food, almost every sector of the economy has been directly affected by the US dollar becoming less and less valuable. So today, we're going to be discussing why cryptocurrencies will replace the US dollar. Since the start of the pandemic, we have seen some pretty insane headlines, with 40% of US dollars in existence were printed in the last 12 months, quickly turning into 80% of the US dollars in existence were printed in the last 22 months. For centuries, world powers have been dealing with hyperinflation, trying to limit its grasp on the economy. In fact, it's usually the reason why countries collapse from starvation, war, and power. All of these things can be directly attributed to the wrath of too much inflation. But what if I told you that some inflation was a good thing? In fact, it's actually a healthy sign for an economy to see around a 2% increase in inflation per year, with John Williams, the New York Federal Reserve president, suggesting as much.
The word symmetrical was in the statement twice this month.
Yeah. Well, as you know, from the beginning, we've seen our inflation target as being a symmetric one, where we want inflation to be on average around 2%, sometimes above, sometimes below. Given that inflation's been below our target for a number of years, I think it is important to reinforce that message that we think of this as the 2% as the midpoint of where we expect inflation to be. And I am personally comfortable with the fact that inflation may overshoot that 2% for a while, but again, looking to get this average.
And if you look at the numbers from 2013 to 2020, the United States average inflation per year was about 1.6%. But in that same amount of time, Bitcoin grew from being valued at around $100 per token to then being valued at over $27,000. A small amount of inflation helps boost the economy by giving citizens a reason to spend. Don't believe me? Well, let's say for example that you save $10,000 in a given year, and in that same year there was a rate of 2% inflation. This would then cause the value of your savings to drop to $9,800, meaning that in order to get the most bang for your buck, you need to spend it. But of course, this isn't the only option for your average consumer. You can invest in the stock market, land, NFTs, and even cryptocurrencies. Keeping all of your earnings locked up in a bank all year will only see your money depreciate in value over time, making investing one of the only options to combat inflation. But are we saying that inflation is always a good thing? Absolutely not. In fact, like we said, too much inflation can destroy a world power. Notice that we only use the annual inflation data from 2013 to 2020, and not the last couple of years. That's because in the last 2 years, the annual inflation rate was 7% in 2021, and so far in 2022, it's been 7.5%, meaning that the inflation rate is almost triple what it ought to be. In 2021, Bitcoin actually peaked around $63,000 per token, and the high so far for 2022 has been around $47,000. And everyone in the United States has definitely noticed the inflation of the US dollar, from gas prices rising to your grocery bill adding an additional couple $100 every month. Everyone was affected. As of February 2022, the US inflation hit a 40-year high as the Federal Reserve continues to print trillions of dollars out of thin air. The US is now on the path of 1921 Weimar Germany. The Fed's addiction to money printing has kept the party going for Wall Street while fueling wealth inequality. Today, the stock and cryptocurrency markets are at record highs while income and wages remain almost the same. The Federal Reserve continues to print more money, further devaluing the dollars and enslaving millions of Americans. But the reason why the Federal Reserve printed so much more money during the early years of the pandemic was to help alleviate the financial crisis that was brewing when the world economy basically was halted for a few months. However, now this is being seen as a temporary fix as the inflation will always inevitably hit. At the rate we're going, the Fed's addiction to printing leads to further devaluation of the US dollar, since money printing doesn't necessarily increase productivity or economic output. What the Fed is doing now has been tried throughout history, and the outcome has always been the same. Take, for example, Germany. Between June 1921 and November 1923 in Weimar Germany, the highest monthly inflation rate rose by over 30,000%. Zimbabwe is another country with hyperinflation. Meanwhile, money printing is nothing new. The Federal Reserve has been printing money since 1971, when the United States moved away from the gold standard after President Nixon ended the convertibility of US dollars to gold. On August 15, 1971, former President Richard Nixon said in a speech, quote, "I have directed Treasury Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interests of the United States." Funny that now we no longer use the gold standard, but somehow, some way, we have discovered a new gold in Bitcoin. In fact, it's literally valued more than gold too. In 1970, the average income was $9,400, and a new house was $23,400. Today, the cost of an average home is over $200,000. And the worry now is that we could potentially see hyperinflation, which would essentially take that cup of coffee you bought this morning from $5 to $5,000. But where the weakness lies in the US dollar, strength is discovered in crypto. Since for so many currencies such as Bitcoin and Ethereum, there is a finite amount in circulation. There's no chance that a private company such as the Federal Reserve can come in and help cause inflation so drastic that simple amenities are then turned into a debate on what to and what not to get from the grocer. A report by Futurism highlights some potential outcomes if cryptocurrencies surpass fiat currencies at some point in the future. One important consideration is that cryptocurrencies cannot be manipulated quite as easily as fiat currency, largely due to their decentralized and unregulated status. Beyond that, cryptocurrencies could better support the concept of a universal base income than fiat currencies would. As a matter of fact, some programs have already experimented with the use of cryptocurrencies as means of distributing a universal basic income. This has been seen in some tokenomics of particular coins. Some nations are beginning to take in cryptos with open arms, such as El Salvador, which began accepting Bitcoin as a legal tender in September, and through the cryptocurrency's ups and downs, the country's economy has benefited in an unexpected way. El Salvador was the first country to adopt a cryptocurrency as a legal tender as the government looked to achieve financial freedom for as many people as possible. Since the decision, Bitcoin prices have experienced their trademark volatility, with the cryptocurrency starting September at nearly $49,000, peaking at $69,000 in November before settling at about $37,000 currently. But despite the volatility, El Salvador says that its decision has been paid off in ways not related to the price of Bitcoin. The implementation of Bitcoin benefited the sector. More tourists have come to see how cryptocurrency works, said Morena Valdez, the head of Ministry of Tourism. Quote, "We did a poll to check the activity according to the before and after of Bitcoin. The tourism sector increased in November and December more than 30%. With some of the largest markets for crypto currently being in the United States and the uncertainty of the economy, one can suggest that it is not a matter of if crypto will replace fiat currencies, but when." Guys, don't forget to like, comment, subscribe, and ring the notification bell to stay up to date on all things crypto and NFT related. Thank you so much for watching and have a great day.